Welcome back, my passive income investors. I like to one of the most intense conversations that is pretty incremental and unentertaining from somebody like me. And I'm talking about credit cards, debt, margin, leveraging money. I mean, I got a bunch of cards here. I don't want to show them too much because obviously I don't want to give too much away here, but I probably got about $35,000, $40,000 in credit that I just refuse to use. And I only really have for liquidity purposes. But I made a video literally a month ago talking about one of the biggest YouTubers in the financial space, meet Kevin, and he was leveraged over several $1,000,000 in margin. And on the last stream that him and a bunch of other big YouTubers did on a stream called Millennial Money, he revealed that he paid off his entire margin debt. And I'm sorry, but this conversation was so interesting, I had to break it down, and I'm going to share it for you in case you didn't see it. And I don't want to offer any opinions because I want you to come to your own opinion and let me know what you think about this in the comment section below, because damn, it is interesting watching millionaires do crazy things with their money. So stay cool, stay awesome, and enjoy these clips.
Hey, Kevin, you still holding all of your Bitcoin?
Sorry?
Not all of it that I had, but a good chunk of it. I did. I may have paid off all my margin.
Nice.
No.
Yeah.
What?
Yeah, I
What
just posted
happened?
a video about it. I'm really happy actually, because the margin's kind of weird. It's been it's one of those things where, like, I used to get excited about buying stocks. Like I'd wake up in the morning and be like, oh, I get to go buy some stocks or whatever. But lately it's kind of been like, oh yeah, you got paid, and then you look at what you got paid, and then you look and you go, wait a minute, I'm $6 million in margin debt. Like it don't move the needle. And so all of a sudden you look at it, it's like, oh, this is not good. This is not good. So yeah, I now officially have zero margin. I'm really excited about that.
Proud of you, man. That's awesome.
Man. Wow. Now, do you think that's because over the last month and a half or so, because it seems like your enthusiasm for margin started waning as some of the stocks started dipping a little bit? And overall, I mean, the broad market, yeah, we're higher, but we didn't see those gains. I think, I wonder if your enthusiasm, you would be like 8 million in margin if, stocks like CCIV were still like, going to the moon. Do you think that impacted it?
I don't think so, because I started my deleveraging around February 9th. February 9th and February 16th, I had big sells. I sold, somewhere around, in total, I think it was like 1.7 million or something like that, just to reduce margin. And then when the crash happened, that's when I really, I'm like, oh, double down, buy. But it just got out of hand. I bought probably way too much during the dip. And so what I did is I converted a lot of that into leaps, just long options. So 2023 call options, whether that's Tesla or Square or some of my favorites, Etsy, Pinterest, or even some of the SPACs. And the cool thing about those is there's no margin call, even though they're way more volatile in pricing. There's no margin call. So nobody's going to call me up and go, oh, margin call. It's like, it's my money. So I look at my portfolio. It's like, that's all mine now. It's really cool.
And that's you're buying way in the money, right, Kevin? Or are you buying out of the money?
It's a mix. So some of them are way in the money. Stocks that I'm using is more of kind of like a safety balance in that. Some of them are at the money. A lot of them are pretty close to at the money. And then I bought Tesla spaced out all over. I bought some Tesla in the money, some Tesla at the money, and some Tesla way out of the money. So I just kind of really spread it out. I tried to really diversify it. And my theory is that the market is going to boom at some point, in my opinion, between September of this year and, September of 2022. Like over that year, we're going to have some crazy rally. And in that crazy rally, ideally, I take long-term capital gains, turn it back into shares. Now I've had leverage buying cheap options in the crash because the options are so cheap because everybody's like, I want to short. How do I buy puts? How do I short stuff? How do I sell calls? Like everybody's doing that right now. So option prices are wonderful right now. And at the same time, people are deleveraging and I don't want margin because it makes me feel like crap. So I'm like, well, I get leverage. I double down on my belief that the market's going to do well, once we get through this inflationary period. And
Okay, let's talk about the calls real quick here. Tesla, I'm guessing that's where you have the majority of your calls by far, or is it another
probably.
stock? Okay. Okay. Yeah, because I mean, I'll be honest, as a Tesla investor, I'm really worried that Tesla could be in a range for 1 to 2 years.
Sure.
And that's kind of, I
Would be
guess,
bad.
yeah, that's kind of what I worry about here. Like, I don't think Tesla's going to be in a 5 to 6 year range like it was from like 2013 to 2019. But I think it's very possible that it could chill in anywhere from like 500 to maybe like 850 for like a year or two. And that's the only thing I would worry about with kind of an approach like you have there.
Yeah, my chill range is a little higher. My chill range is with the fundamental belief that Wall Street is not realizing that Tesla's going to well exceed 1 million vehicles delivered and produced this year. I think Wall Street's still thinking it's going to be like an 880. Once we get out of the doldrums of this market that we're in, to me, the range bind for Tesla's probably going to be 9 to 1100, somewhere on there, 900 to 1100 is where I think maybe we kind of get stuck for a while until we really get like that FSD rollout. Once Wall Street's like, oh, dang, okay, we're really producing it. That was sort of my theory on Tesla. And I'm looking for that rally over the next year where we see that. And as soon as we see that push to like, even if we just hit, like we hit $1,000, I'm probably dumping all of these options instantly and just buying the shares at that point.
Okay, I got you. Yeah, that's interesting. Yeah, it's
way more risky. And so some people they hear they're like, "Oh, Kevin, you sold. That makes you a paper handler." Like paper handlers reduce risk. I'm actually increasing risk by doing this in some sense because now I have I do have to play the timing a little bit. I'm just confident in how the market's going to perform, and so I'm just kind of putting my money there while at the same time having no margin, and we'll see.
Yeah,
isn't that somewhat the same? You're just kind of shifting risk around. Isn't that? Wouldn't that be
it's
somewhat
different.
The same thing as keeping margin? How so?
It feels different for me because 27% of my portfolio is options now, and 73% is my longs. So my longs totally peaceful. I could go on a vacation today for a year and come back and deal with it, and I think it'd be fine. That's what I'm excited about. Whereas when you're on margin, it's almost like every day it's like, oh, you're trying to keep it at 20%, and then it's like, oh no, it's going up because the market's going up, and then you're like, oh, I don't want to buy. Now, if I got extra cash and there's a dip, it's like, oh, sure, I'll buy another option on that. Let's go. Let's get the March 2023. Let's get the June 2023. You know, it's gonna be fun.
At least you guys can get slaughtered on Coinbase.
Well, I actually bought Coinbase options too. I got Coinbase options at 320 is what I got.
Nice.
So I'm bullish on coin. I don't know. I like coin.
Yeah.
We should change subjects, but I want to talk about Tesla a little more. The thing that worries me about Tesla also, if we're talking about short-term ranges and things like that, is you've had such immense buying pressure from Cathie Wood, right? Just alone, like obviously more fund managers than just Cathie Wood, but I mean, she's been, over the last year or two aggressively buying. You've had every retail investor out there wants to be invested in Tesla, right? Regardless of price for the most part. And I do worry, I'm kind of thinking like, man, what if, this buying pressure kind of subsides? You're naturally always going to have some more selling pressure, right? Because certain people have to sell for different reasons. What if the funds start selling? Also, there's more competition, I feel like, for our money as investors than maybe ever, because so many companies went public last year. It's like, Palantir wasn't in the market last year. Coinbase wasn't in the market last year. You go through a lot of these different stocks that all of a sudden now it's like, okay, do I put money in Tesla at 715, or do I put money in Palantir at 20, or do I put money in Coinbase at 312? And so that's another thing I kind of think about. I'm like, there's a lot of companies to be very excited about, and does Tesla get enough to really push that buying pressure up? So just something I think about.
Yeah, I think Tesla will generally outperform the market over the next 5 years, at least. I think a lot of Wall Street believes Tesla's like a here today, gone by 2025 because of competition play. I think Tesla peaks in 2030 to 2035, and that this is really an investment in Tesla to me is a 2050 play. We're not going to be fully electric until 2050. You know, people think, oh, okay, electric vehicles are coming. That's it. The EV wave is over. This is a 30-year investment into whether it's Tesla or some of the other energy companies. I mean, I don't know who talked about it, but somebody was talking about, and I saw the articles on it too, Apple using the Tesla mega packs. Like, that's not even realized by Wall Street yet. The fact that Tesla is so much more than just the car company. And of all of the stocks I can look at, that is the one that I just keep looking at going, it's got the growth. It's got the verticals. It's got the brand. It's got the margins. It has everything I want in a stock. It makes no sense for me not to keep plowing money into it.
Mm-hmm. Yeah, no, I can understand from that perspective. Yeah, it just gets dangerous as far as like timing, because the market, the market didn't recognize Tesla for 5+ years, and then all of a sudden it just goes in a straight line.
Oh, yeah.
And but I understand the risk standpoint. Options, man, that's the only bad thing. It's like you get under this time constraint where all of a sudden you're like, crap, I need in the next 18 months, I need blah 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 to happen.
I got 18 months. And what I'm looking, that's why I don't want to get greedy with them, because I do want the low stress. I like the idea of no margin right now, especially since Lauren's trying to get into a house. So I want to free up some capital, but which that'll be fun. But for right now, my big thing is, hey, all it takes is a nice solid rally, whether that comes this September, this December, next February, next summer. I don't care. All I need is one good rally. I transitioned to shares. Boom. I had leverage via options. If it doesn't work out, whatever, there goes 27% of the portfolio. Well, worst case, right? That's 27%. Yeah. But I don't even think that would happen, because realistically, I could probably sell them for at least half the options. We'll see at some point. And I'm hopeful. It is more risk. It is a bet. I actually call it a little bit of a YOLO. I'm not encouraging people to do it because it's more risky, but it feels so right.